Hi, this is Jim in New York. Hey, do you see any signs that a couple of our macro managers are hinting at this, that the property bubble will reform as an equity bubble?
Peter, do you know this, like in terms of size, the housing market versus the property market? I think property market, no, I'm sorry, the equity market is still very small compared to the housing market, right?
Oh, that is correct. Yeah, as an asset class, shares are much smaller in urban China than properties. But it is an interesting question because we've seen an amazing increase in share prices in the last 4 months or so, 60% up or more. That while the economy is slowing, and I think the most plausible explanation for this otherwise hard to understand development is that many people with money, many speculators have given up on the property markets and now putting their money in the stock exchange, particularly now this direct link with Hong Kong has become a possibility. I don't have another good explanation for the runaway stock prices.
And then obviously a lot of purchases and transactions have been done on margins, right? So, into account with the investment amount exceeding X, whether it's million or hundreds of thousands renminbi, they can borrow up to Y times from their brokers, and then the brokers kind of turn around and there's a double story in it. They turn around, then they sell it to a brokers or something.
Well, I think if you allow me to interject, I don't know either precisely what's going on, but one broad perspective on the Chinese property markets and stock exchanges is that we are still in the middle of a huge process of financial sector adjustment, which was heavily controlled by the party, which is now slowly liberalizing, partly as a result of the spontaneous development of shadow banking, but partly also because the big financial bosses wanted to go that way. They want to move in the direction of a more liberalized financial markets. But this is still, we are in the middle of that, so anything can happen. The shift from property markets to stock prices to shares is one possible explanation for the runaway price increases in the last quarter of last year. Another possibility is, which I think is also a reality, is that a lot of the brokers have opened up to margin financing. And a lot of the shares are not only bought with own equity, own capital, but with borrowed money, which is potentially very dangerous, of course. And when the authorities in Beijing realized that a lot of the share buying was actually financed with borrowed money, they clamped down on the margin buying, which at least temporarily for about a week and a half caused the price increase to halt and temporarily reverse. So let's not try to understand all the details. We are in the middle of a huge structural financial sector adjustment process, and that will take several more years. In the meantime, all sorts of crazy things can happen.
Yeah, so in other words, volatility will be tremendous.
Or just a few general comments. I still believe that we are in the middle of an adjustment, a cyclical adjustment process in the property markets, and not on the way down to a huge crisis. It threatened to become a crisis when the bubble became very serious in 2009 and 2010, but after the very intensive government efforts to cool demand, particularly speculative demand for the higher end markets, they seem to have succeeded, at least so far, in capping the bubble. Totally different evolution of events that we had in the US where the bubble was allowed to grow ad infinitum in 2004, 5, 6. So it's a very obscure situation, very hard to put your arms around it. I believe that the adjustment process may take another 1 or 2, possibly 2.5 years, but no crisis. There are some indications in just recent weeks, but Junheng would know much more about it than I do, that at least in some parts of this huge urban residential property market, there is an upturn. There was an auction for land, development land in Beijing 2 weeks ago, where prices went through the roof. Everybody was surprised that for the first time in years, developers were bidding up the prices for urban land in Beijing. But Beijing, of course, is not representative of the urban property markets in China. It's far too big to generalize. The other indication we have that there may be something more positive developing is an upturn in average prices in recent weeks or months. I'm not sure that I can show you the graph, but a research assistant of mine, if I could just hold it in front of the camera, showed that in all the major cities, Shenzhen, Shanghai, Tianjin, Beijing, Chengdu, Chongqing, and Guangzhou, in recent weeks at least, average property prices as transacted have moved up. And the combination of these two developments, the auction in the land auction in Beijing and the NBS numbers on property transactional prices in some major cities, suggests to me that perhaps the end of the downturn or the cyclical adjustment period is closer than we previously thought. If we are so lucky, then all these dire predictions about a hard landing for the whole economy or sliding down to 3 or 4% growth, I think are overblown. We all know how important the property sector is in the overall Chinese economy. It probably in recent years accounted for at least 25% of GDP. If you include all the industries that are dependent on the property sales, like steel and aluminum and doors and all the faucets and what have you, that's a significant part of the Chinese economy. So if that turns up, then it will have a positive effect on many parts of the economy, particularly in the manufacturing sector. But it's too early to make that call. I am very cautiously optimistic that we are going to avoid a crisis, both a real estate crisis and a financial crisis, and that even though the slowdown will probably continue for a while, that we are in more likely have a sustainable, relatively high growth path for the next 15 years. Malcolm, just to clarify one point I tried to make in my first comment. The evolution of the Chinese real estate bubble, which threatened to undermine stability of the property and financial markets a few years ago when they started their stimulus program, the evolution of that bubble is totally different from what happened in the United States in the years leading up to our financial crisis in 2008. Greenspan and his associates who ran the Fed at that time did not want to recognize that there was a bubble developing. And even if they were willing to acknowledge that there was a bubble, their conclusion was that's not our problem. We cannot recognize bubble, and even if we could recognize bubble, we don't know what to do about it. This is the market. It's easier to clean up after the bubble burst than try to control the bubble. The Chinese approach to their bubble, which began to become serious after so much liquidity was pumped in the economy from the end of 2008 onward, the Chinese official response has been totally different from Greenspan's. Their response has been, if there is a bubble, we better recognize it and try to do something about it. That's why they began to introduce all these administrative buying restrictions in April of 2010. Then the market overreacted to that. Prices actually went down, and they didn't want that either because they were afraid that that might slow down the economy too much. So they began to remove some of these administrative restrictions again last year. And it seems that the Chinese, although it is too early to tell, it seems that they have succeeded in controlling a very dangerous bubble, which the US was unable to do.
It's Pieter said one thing that's exactly right. It's a really, really tough thing to put hands around it, because we've been seeing really conflicting data points. On the reported, like 43 key cities, the transaction volume prices, it seems like stabilizing. But when we talk to developers and follow, individual, because we've been doing, 2 projects, big projects each city for 12 cities over the past year. Price deceleration pretty clear, not big, anywhere between 5% to 10%. That's on the explicit side, but there's obviously implicit discounting, such as giving, free parking lot, auto licenses, etc., etc. So if you take those into consideration, it might be 10 to 15%, but still less than what we had thought a year ago. And when we talk to developers, and when we talk to the online transaction guys who sell apartments for developers, just things do not look great. I mean, they themselves, the people on the ground that do not share confidence as most people on Wall Street in the investment community seems to share. So I mean, there's definitely conflicting data points. So that's really sort of our observation.
A lot of people have been saying for a long time that this real estate market in China is a bubble, but as Pieter mentioned, in the last month, housing prices have actually turned up, which is not what happens in a speculative bubble popping. So I just wanted to see if there was anybody still on the bubble bandwagon, and what people who still were had to say about that.
And I really think that you need to wait out a little bit because of the Chinese New Year. I think all those and the timing of it. Last year was the last day of January. This year is mid of February. So what we do is we got those like weekly data. We kind of just ignore them, and we're going to combine January and February, and then perhaps the combination tells a better story as opposed to year to date. 6 weeks, whatever. I think that's. I mean, it's a little bit like kind of. It has seasonality bias to it because of the timing of Chinese New Year.
Yeah, that makes sense. I've heard a lot of people say that a lot of data coming out of January and February is tough to compare because of the New Year falling in different dates. So do you think that next month we're going to see the numbers drop back down again?
I think January and the February, once you have the February number and January number, of course, then you combine the two, and then it's more apple to apple, as opposed to Jan to Jan, the Feb to Feb.